Hello everybody, welcome back to the channel. Got an interesting article here. We're going to go to it right now regarding the stablecoin topic. So that's something that of course we are very interested to study here. So here is the article. It says BIS warns stablecoin risk fragmenting global financial system. So the Basel-based institution said that private digital tokens fall short of the requirements for sound money and urged policymakers to accelerate work on tokenized forms of central bank and commercial bank money. So the Bank for International Settlements, BIS, warned that the rapid expansion of stablecoins risks fragmenting the global monetary system and weakening sovereign monetary control, urging central banks and the financial industry to accelerate the development of tokenized forms of central bank and commercial bank money as a safer alternative. In its annual economic report published Sunday, the Basel-based institution delivered a sharp assessment of the approximately $316 billion stablecoin market, arguing that tokens pegged to fiat currencies lack the institutional features required to serve as safe, reliable money at scale. So BIS pointed to structural vulnerabilities in reserve asset management and warned that a significant migration from commercial bank deposits into private digital tokens could reduce bank funding and constrain credit to the real economy. The report also provides a signal to policymakers that the current regulatory approach to stablecoins may prove insufficient if private digital currencies continue expanding. Rather than positioning stablecoins as a durable foundation for the future monetary system, BIS said that tokenized commercial bank deposits, combined with tokenized central bank money operating on regulated infrastructures, offer a more robust path toward modernizing payments while preserving monetary stability. So, the article continues. The report focuses particular attention on stablecoin dollarization, that is, the growing use of dollar-denominated stablecoins in economies with weaker domestic currencies. According to BIS, this trend could weaken monetary sovereignty, erode the effectiveness of domestic monetary policy, reduce bank intermediation, and increase exposure to volatile cross-border capital flows, particularly in emerging market economies. BIS raises fresh concerns about public blockchain's limits. The report also delivers one of BIS's strongest critiques yet of public permissionless blockchains such as Bitcoin and Ethereum as a foundation for the monetary system. It argues that decentralized networks relying on distributed validation and lacking a central governance structure struggle to meet the requirements for scalability, legal accountability, and settlement finality expected of systemically important financial infrastructure. At the center of BIS's critique is the economics of decentralized consensus. The report argues that the public permissionless blockchains compensate validators through transaction fees that rise as network activity increases, making congestion, longer confirmation times, and higher cost structural features of the system rather than temporary technical shortcomings. According to BIS, these characteristics undermine the efficiency and network effects that are essential for a unified monetary system. The Basel-based institution further argues that permissionless blockchains lack the clear governance and accountability frameworks required for institutional finance. Without an identifiable entity responsible for maintaining the integrity of the system, resolving disputes, or ensuring compliance with financial integrity standards, BIS contends that such networks face significant obstacles to supporting large-scale regulated financial activity. Rather than rejecting tokenization itself, BIS advocates a unified ledger architecture that combines tokenized central bank money, tokenized commercial bank deposits, and tokenized financial assets on programmable platforms operating within regulated legal and institutional frameworks. By preserving the benefits of tokenization, including programmable transactions and faster settlement, while maintaining the institutional foundations of the existing monetary system, BIS said that financial markets can improve efficiency without sacrificing monetary stability, financial integrity, or public trust. So if we go over here to some of the visuals of this report, if we try to make this a little bit bigger, so you can see here in this visual, it says on the left side, A would be increasing inflows to US dollar pegged stablecoins from non-USD currencies. And so back in 2021, that would have been roughly under 25 billion. And then the last few years, even as of 2025, that increased to well over 100 billion in total. Okay, so USD plus euro plus other fiat currencies. So increasing inflows to US dollar pegged stablecoins. Now, B shows, it says stablecoin inflows depreciate the local currency and widen stablecoin fiat currency parity deviations. So what they're basically saying here is that if you have a currency, a local currency, let's say in Africa, let's say somewhere in Asia, and those currencies are they're jumping into a stablecoin, most likely a US dollar pegged stablecoin. That means that the local currency is going to be depreciating, and it's going to be widening that stablecoin fiat currency parity. So as you see here on the left side, you've got the basis points, BPs, and then the days after the shock. So there's this sort of percent of decrease, which is actually quite measured, because it would go up to basically close to, as you see on the left, it would be 15 basis points. On the right, it would be 60 basis points. So this is actually quite revealing, because it's basically saying that up to 1% shock within, of course, as it shows you here, in the first few days, first few weeks, it takes a while for the economies to absorb that shock, that exodus of funds, leaving the local currency and jumping into a stable coin currency. And if we go down further, it says, okay, over here it's just showing you, it says on the left, it says A, growing fragmentation of layer 1 networks. So you can see Ethereum is the majority in the darker red. And then you can see there was Terra, which was short-lived, the darker sort of gray here. And then you have, of course, in the light gray other, which is a certain percent, which is roughly a little over 25% as of current trends here in the top right corner. And then the other ones would be Tron. Tron is very big in China. Then in the light orange, you have Solana. So Solana's got about 5%. You've got Avalanche, which is the bright yellow, which is basically 1-2% maximum. And then Binance Smart Chain is sort of the light blue. So Binance is about 5+%. But Ethereum still has, as you can see here, roughly 45% of the layer 1 networks. And then on the right, the B, it shows you B. It says rising use of layer 2 networks adds to fragmentation. So when they're talking about layer 2, you can see there's an increase in diversity. So for example, on the left here, back in 2021, it was really just one color, okay, for layer 2s. And now as of 2022, 2023, you've got more colors here. So you can see in the, you've got base, you've got Arbitrum 1, you've got in the brown here, you've got basically OP mainnet, Mantle. In the dark blue, you have Unichain, and of course, other is still a small percent. So, an interesting illustration here of what they titled this to mean fragmentation. Okay, so that just means that there's sort of all of these places where stable coins are going to be running to different networks and utilizing different networks. So that was a very interesting article. for some of us who are passionate about stablecoin. So this, of course, Basel, Switzerland, if I'm not mistaken, published over the weekend, back on Sunday, just a few days ago. So this article is quite timely, and I wanted to bring it to everyone's attention and read it together. So in conclusion, this is a critique from the Bank for International Settlements, and their critique is that if there's going to be more and more stablecoins, these stablecoins are going to risk fragmenting the global monetary system and then weakening sovereign monetary control. Okay, specifically, it seems a lot of the governments that are have their currencies, again, maybe let's say Latin America, let's say parts of Asia or Africa, where these currencies, you have a lot of people that would prefer to jump into a USDT or a USDC or another stable because they're going to be avoiding inflation or, of course, other sort of concerns. The ability, the ease, the facility of holding on to your USDT or USDC on your mobile phone, as opposed to a bank card, which might be physical, or a local bank, which is essentially only in the local currency, which again is fighting inflation or depreciating purchasing power. So the arguments that they present are interesting, but there are certainly counter arguments that people would bring up in defense of stablecoins, whether that's a USD pegged stablecoin or, of course, euro or other types of currencies that might have a peg to it, such as Japan or Australia, etc. Okay, so with that being said, once again, we are cryptodeposit.org. We strongly recommend people take a quick look at cryptodeposit.org. Of course, you can connect your wallet right away. You can use our partner platform, Crypty. You can see I'm using MetaMask most of the time. There's dozens and dozens of wallets that you can connect. They're all compatible with the cryptodeposit.org platform. So again, if you are interested in depositing cash, we have a deposit cash after you've connected your wallet. We have buying stables. You can get USDC, USDT right away on the deposit platform. You're welcome to deposit your stable coins. You can deposit USDC, USDT, and as you see here, there's a yield curve. So that is also something that we can adjust. Just reach out to us, and then again, you can see your holdings. They appear as NFTs in your MetaMask or whatever wallet you're connecting to. We have a borrowing and lending protocol that you can get involved with. OTC is really sort of a request for proposal. So if you wish to get involved with, as you see here, you can wire fiat, you can buy stablecoin, sell stablecoin, you can, as you see over here, you can do stable on-chain. There's a many options. And then finally on the right here, if you click on the arrow over here, you can go to statements. You'll have your statements. Again, if you connect your wallet, messages, which is XMTP, the highest standard in security. Activity, you'll see your activity history. And then the last two tabs here are exchange and swap. So these are rather new additions, and we intend to get some tutorials on this, or otherwise just email us at info@cryptodeposit.org and we can get you onboarded. There's a bunch of onboarding tutorials already on the YouTube channel. So with that being said, we wish everybody a wonderful day. We wish everybody a wonderful afternoon or evening, wherever you all may be. And we will be back very shortly with another video on a very timely topic. So once again, thank you for your time and attention, and see you on another video soon with more information from us and the team at Crypto Deposit.